Namaskar, sir. I welcome our viewers to the YouTube channel of the Insurance Institute of India, where we bring you the opinion makers of the insurance industry. I am MC Chaturvedi, the Director Academics in the Insurance Institute of India. Welcome to this third episode of our series titled Milestones. Today we have with us Mr. Nilesh Sathe to share his thoughts with us. Mr. Sathe needs no introduction to the insurance world. Having served the LIC for more than 3 decades, he moved on to IRDA to guide the insurance industry from the position of member life. In the most turbulent times, I would say, having a vast experience of running a mutual fund, that is LIC Mutual Fund, creating a new marketing channel in LIC, that of Chief Life Insurance Advisors, and now providing his advice to many companies in the corporate world. As independent director and as a consultant, he has been there in the middle of a lot of happenings. He has seen it all. I welcome you once again, sir. Welcome to our channel.
Thank you.
In India, sir, we've had the opening of this new insurance sector, and we have seen a gradual, a lot of movement, formation of multiple companies. We have seen capital infusion at different stages, and then we have seen a situation where the promoters have got the companies listed to unlock the capital, so to say. So you have been in the helm of affairs in IRDA and also in LIC in those times. So with your experience, I would like to use your insights into for the benefit of viewers. I would like to know what is the right philosophy behind these listings. How does it benefit the customers? How does it actually benefit the industry as a whole? And last, how does it benefit the investors?
Fine. Good, Mukesh. I compliment Insurance Institute of India for this new endeavor. See, actually, in 2015, you are aware that the Insurance Act 1938 was amended. It was amended after a long time, and that was, I will call it as the second phase in insurance industry where the changes started happening. The first, of course, was 2000 when licenses were issued to private insurance companies which had foreign partners. Most of them had foreign partners. The second phase started after 2015 when the act was amended, and during which time we at IRDA thought that just as the banks are directed by RBI to get listed within a span of 6 years as soon as they get license, why is it that the insurance companies also should not be asked to get listed after a span of maybe 8 years or 10 years or some sort? Because already many industries, many insurance companies had completed more than 10 years. So we issued a discussion paper on 11th of August 2016, and the discussion paper was listing of Indian insurance companies. This discussion paper basically was intended that the promoters would take a view that going forward, if listing is made compulsory, they will prepare themselves for listing, because listing doesn't happen in a day. It takes a long time. The intention behind this was first is to enable the retail and institutional investors to participate in the fortunes of the company. The second was disclosure requirements are significantly higher if a company gets listed, because IRDA had specified disclosure requirements, but the disclosure requirements under Companies Act are much more than what are prescribed by IRDA. The third important purpose was there will be a greater scrutiny of the decision-making process, resulting in greater transparency of operations.
Yeah.
What does it mean, Muktesh? Actually, it simply means that once a company is listed, even if a shareholder is having one share of the company, he has got right to attend the annual general meeting, raise his finger, and question the top management of the decisions that they have taken, which in his opinion are right or wrong.
Yeah.
Now, this is something which empowers the shareholder to question the management, which otherwise, when only promoters are the shareholders, this doesn't happen. So it will have a greater scrutiny of decisions or decision-making process. And the last but not the least was to ensure that the interests of minority shareholders are protected and the annual results are published, analytical results are published, because the Companies Act requires a lot of financial results to be published of subsidiary companies and holding companies, this and that. So this was one of the major intention, and since Reserve Bank is considered as what other financial regulators follow. So since RBI had made it mandatory, we also thought that IRD also should make it mandatory at the end of certain number of years, not necessarily 6 years, because you know that insurance is not such an easy business, and it starts generating profit not immediately, just like banks, but it takes a longer number of years to start generating profit. So even if banks are asked by RBI to get listed in 6 years, we thought that for life insurance companies, we may ask them to list after 10 years, and for general insurance companies after 8 years. That was a reasonable estimate by end of which these insurance companies would start generating profit. And in 2016, when these guidelines were issued, not guidelines, this discussion paper was issued, there were 16 life insurance companies which had completed 10 years. Okay. And there were 12 non-life insurance companies, that is general insurance companies, which had completed 10 years. So at least there will be 28 insurance companies which may have to get listed immediately. Means whatever is decided within a year of this discussion paper resulting into guidelines or regulations. So that was in the mind. But Muktesh, you will be surprised to know that every insurance company, even those which got listed or which is likely to be listed now, they vehemently criticized this stand of IRD. And the reasons were, one most important was, they said, see, we have got an agreement with the foreign promoters, and they will not agree that we will sell the stake in the market, because reducing stake means both partners' stake would have got reduced, that is joint venture partners. So they will not agree. At the time of issuing of license, IRDA had not specified these ground rules. So you are changing the rules of the game in between, so which is not correct, and so on and so forth. But then after the paper was released, Muktesh, the response was quite good, and you'll be surprised that within a month there was one insurance company which came forward for listing, and it was ICICI Prudential. And ICICI Prudential filed their Red 3 prospectus, and finally they offered their shares to public on 19th of September 2016, and the share price offer for share was at 334. You know that how complex it is to understand how the pricing of insurance companies is done. It depends on the embedded value. Working out on embedded value is very difficult. Future profits are to be discounted at present value, so on and so forth. And there are certain estimates or assumptions which are required to be made. So people at large were also not quite sure whether the price of 334 was right or it was not right. As a result of which, when IPO it got listed at 8% less, and it got listed at 309 rupees. But very quickly, it crossed the threshold of 334. And today, yesterday rather, I have got some data because I had to speak on this subject. The closing price was 496. So from 334 in 5 years, it has gone up to 496. In addition to that, the shareholders would have got dividend during these 5 years. So effectively, the return has crossed 50% in 5 years. Then the second insurance company which came up with listing on 20th September 2017 was SBI Life. And same thing happened. They had offered it for 700 rupees and it got listed. When it got listed at 664, which is 6% less. But this company again, as ICICI shares increased quickly, it also crossed 700 threshold very quickly. And yesterday it was trading at 1102, which is an increase of 57%. If you take into account the dividend that is declared, it will definitely be effectively more than 60% return in the span of about 4.5 years. Means effectively it has given a return of more than 12-13%. And the third insurance company which came up for listing was HDFC Life. And on 17th of November 2017, they had got these shares listed where the offer price was 290. With the experience of two earlier companies, probably they played very safe, and the offer price was much less than what it should have been. As a result of which, at the time of listing, it got listed at 384, which was 32% up than the offer price. And yesterday's close was at 524, which is 80% above the offer price. And taking again the dividend into account, the effective yield would have been 85% or so in a span of just 4 years, or 4 years and 4 months. Means effectively it has given a return of more than 18% per annum. The issue size of HDFC Life was highest, which was 8,695 crores. For ICICI, it was 6,057 crores, and for SBI Life, it was 8,400 crores. And as of now, the market capitalization of HDFC Life is highest, which is at 1,10,690 crores, followed by SBI Life, which is at 1,10,310 crores, and the ICICI Life's market capitalization is at 71,196 crores. So this gives a clear indication that the shares of life insurance companies have been giving steadily good return over a long period of time. Let us not look at a 3-month or 6-month horizon. I just checked yesterday, in the last 3 years, means somebody who has bought these shares 3 years before, what is the return they have got? So the return from HDFC Life is coming at 65%, from ICICI is coming at 71%, and from SBI Life it is coming at 98%.
Very encouraging.
So, very encouraging. Yeah. Now that is precisely, Muktesh, what I wanted to share with you, that there are less risks involved in life insurance companies' shares. It is not like a trading, or just take an example of the geopolitical reasons which are happening now, the war between Russia and Ukraine. The share price of insurance companies will not get impacted because their business will not get impacted much. The industries which are like mining may get impacted. Industries which are oil related will get impacted. Pharma probably may get impacted, but definitely not life insurance companies. So it's a steady growth in life insurance companies that we'll observe over a long period of time. And that is an encouraging factor for those who do not want to take risk or who do not want to trade on day-to-day basis. These shares are for a longer period of time. And that is how it gives fairly good amount of return. I'm sure what is in your mind is about asking a question on LIC. I want you to ask that. Go ahead.
So all this has been very, very encouraging. I mean, the history has been very encouraging, but we've heard that LIC is coming out with a initial public offer, and it has been shelved for some reasons, geopolitical reasons, I would say. Right. But for the public at large, for the investors who also happen to be many of them would be the policy holders.
Right.
For them, what is it in store for them?
Right. Muktesh, LIC's issue is unique in many senses. One is this is likely to be the issue size is going to be the highest ever. Second is this share will provide a chance to retail investors from nooks and corners of the country to enter the share market. In the last couple of months, the number of demat accounts that have increased substantially. Everybody attributes it to the efforts made by LIC for converting their policyholders into shareholders. Third important is there is a specific quota which is reserved for policyholders. It has never happened in the past. The SEBI doesn't allow your customers to have a separate quota. Technically, these are our customers. But this is for the first time that the retail investors who are policyholders have been allowed a quota of 10% for investment in LIC. The third unique thing is, Muktesh, there is a win-win situation for everybody, which generally doesn't happen. Normally, by listing, the who gets benefited is the promoter because he's able to unlock his capital. But probably if the market doesn't move up, the investors lose, as we have seen in many fintech companies in the recent past. And the third important thing is the policyholders, by even if LIC gets listed, are not going to lose anything because you are aware that there is a section in the LIC Act, Section 37, which guarantees the policyholders' money. Government guarantees it. Now, even if it is listed, by way of which it is not going to be 100% owned by government, but still government has retained that section. So every rupee that the investor will put in insurance policies will continue to be guaranteed by government. So they are not focused, even if it's. Third is, as I said, over a period of time, as we have seen in the last 3 companies, how the performance has helped the investors to get good amount of return. LIC being a domain in the insurance sector or the master in the insurance sector is likely to give good amount of return to the investors who are the shareholders. So the shareholders will get benefited. The promoters, which is government, will get benefited because they will be in a position to unlock maybe 60 to 70,000 crores of capital by allowing only 5% of the stake to be released to the public. And you are aware that in the next 5 years, government has to compulsorily release 25% to the public. Means if they are able to realize 70,000 crores in this 5%, about 3,50,000 crores will be released within 5 years for infrastructure and for developmental purposes for the government, which is a huge amount, which is exceeding the budget, if I remember correctly, of at least 20 states out of 29. See, such a big volume.
It's a very big.
Yes. So this is a win-win situation for everybody. Now let us come to employees, because there were apprehensions in the minds of employees that probably we may be shown the door or something of that sort. Our working conditions may undergo a change.
Yeah.
But Muktesh, let us look at State Bank of India, which was again 100% owned by government. 20 years ago, it got listed first time, and today government is holding maybe about 60 to 65% of the shares of SBI. So 35% of the shares are with the public. But have you come across any change in the working conditions of SBI employees? Answer is no. They continue to be SBI employees as they were 20 years before. No rights and rights of the employees have been curtailed just because SBI is listed. So there is this apprehension is unfounded. It has no basis. They will continue to be LIC employees, but then they will get benefited. because probably the board will be more competent, and more transparency will be there, as I said. And the board members also may question. Just to take an example, if a branch is not doing well, they may question that why this branch is not doing well and what LIC is doing to improve the performance. Today, these questions are not asked.
Yeah.
So it will definitely benefit the organization as a whole. So I'm looking forward. I'm very bullish on listing of LIC, because the share price, which is likely to be announced, not yet announced, is likely to be between 2,000 to 2,200 as per the calculations that many have made, which is a reasonable estimate, because if HDFC Life, which is less than 7 to 8% market share, has got the share price of 524 yesterday, 2,200 is nothing, and this is a 10 rupee share, bear it in mind. SBI share is a 1 rupee share, which is trading at 300 to 400. So definitely it is a fair price, and everybody will get benefited.
Now, all in all, I mean, it's a win-win situation for everyone, including, I would say that even the employees, whatever, if I remember correctly, the government has stated on the floor of the parliament also, the concerned ministers has assured that, you know, the employees, I mean, they will continue to be governed by the. So it's been a, I mean, enlightening talk we've had. I think I'm sure the viewers would be greatly benefited by this. So it was a pleasure talking to you. On behalf of the Insurance Institute of India, I would again thank you for being with us, and I'm sure our viewers would be benefited by this.
Thank you.
Thank you.
Thank you very much.